Welcome to today's morning report, Charles Appraisals on Monday 13th of November with me, Rich Perry, market analyst at Hantec Markets. We've got little real directional markets today. There's no economic data of any real note, and the markets are fairly quiet at the first sort of throes of this week's moves. What we have seen is Treasury yields which jumped higher on Friday. It's just unwinding a little bit, and certainly this sort of to the moves of these markets are sort of driven a little bit to a certain extent by tax reform and the prospects of tax reform, and I think that's going to continue to be the case throughout this week as the committees in Congress continue to sort of mull over how they're going to formulate the tax reform, whether they're actually going to get through Congress or not. So it's very interesting that this is happening, and what we have seen is the dollar, which has pulled back towards its uptrend, found a bit of support actually today on that uptrend, but the market is sort of just consolidating really as it has done sort of in the last sort of week or so. And you've seen that through the market moves on euro dollar, which is still in a very tight range. You've got dollar yen, which is ranging as well. The big move on the day is sterling though, and let me show you the markets board as I talk about that. There. Big move is sterling, and sterling is massively underperforming, and that's come on suggestions at the weekend that the Conservative Party have got 40 members signed up to, or willing to sign up to a letter that would call for Prime Minister Theresa May to step down as leader. Now they need 48 to push that through and trigger a leadership election, but the factor is also that we've got Brexit negotiations running on in the background. Theresa May is meeting up with EU officials today in order to try and push the issue ahead. But certainly the reaction on sterling today from the early moves does not look all that promising for that. And there is a key sort of levels that sterling is now testing and eyeing up on the downside. So this is a big move and is the big move on the day, really. Other than that, you've got a couple of bucks up on gold. Equity markets sort of buzzing around a little bit. FTSE 100 outperforming on that sterling weakness. That negative correlation between sterling and FTSE 100 remains a key play there. You've got a degree of dollar strength coming through these commodity pairs, but nothing really significant. So yeah, we're still sort of waiting out for some tier one data throughout this week, like retail sales to the US and also inflation on the CPI. So at the moment we're fairly settled, and I think we're waiting out for the next catalyst. As I said, there's no economic data today. So my chart today is FTSE 100, and I sort of looked at FTSE 100 on Friday, saw this big double top pattern over the past 6 weeks, completed that double top on the close below 7437, which was that reaction low in late October. So that completed the move to the downside, closing on a closing basis. And what we've had today is a rally, but that rally I think is coming up into just a sell zone really. I reckon between 7437 and 7480, these old lows from late October, early November, and that gives you a little bit of a sell zone. And what did we see today? 7469 as your reaction high, as the market sort of unwound a bit. So this is interesting, and we're seeing sort of negative configuration on the momentum indicators starting to build up. Not on a medium-term basis properly negative yet, because you'd need the MACD lines below neutral, but certainly that bear kiss is not positive on the MACD lines. RSI back below sort of levels that we've seen in October, which would sort of point towards further downside in the near to medium term. But yeah, nothing too significant yet, and you'd sort of zoom out here and you'd say, well, FTSE 100 is still sort of playing out a bit of a range play really, and it's just sort of closed a bit lower within that range. You'd sort of measure that top down, 7565 down from 7437, which is sort of around about sort of 120, 130 ticks of downside. It's not major, and you'd be sort of looking towards 7300 as a potential sort of target zone near term, but that's sort of towards the lows of the range really, rather than anything majorly decisive to the downside. And it's still playing out that on the on the daily RSI as well, sort of buzzing between sort of low 30s to up towards high 60s really. It's just in a bit of a correction phase at the moment. But yeah, if you get a second close underneath 7437 today, that would I think confirm that, especially with this with a failed rally as well, and that would open up the downside near term, but nothing too significant quite yet, but a deterioration nonetheless. Anyway, I wish you good luck in your trading today, and I'll speak to you later. Thank you.